What's up everyone, Steve from the Dividend Dad channel here. If you're looking to grow your wealth through long-term dividend investing, you're at the right place. On this channel, I'm sharing my personal journey to reach 100k in 8 years. Today, we're going to take a dive into my March portfolio performance. And don't go anywhere, because at the end, I'll be sharing with you my thoughts on the current market. Right, let's get the legal stuff out of the way. Remember, I am not a financial advisor, so it's always a good idea to do your own financial research before making any financial decisions. So let's talk about the overall portfolio performance in March. We saw a dip of 3.37%. However, looking at the bigger picture year to date, my portfolio is still up to a solid 4.26%, keeping me right on track with my 100k in 8 years goal. To put that in perspective, at the end of year 1, month 3, my target was 2,207 and my portfolio currently sits at 2,230. So while March wasn't a home run I was hoping for, we are still in a strong position. Now what's interesting is how I fared against the broader market. The S&P 500 took a bigger hit in March, down roughly 6.5%, and it is also in negative territory year to date with about 4.5% loss. So despite the monthly decline, my dividend focused strategy actually outperformed the S&P 500 this month. Looking at my individual holdings, my biggest win for March was CVS, delivering a healthy gain of 4.26%. And on the other hand, SPG, Simon Property Group, was my biggest detractor, with a loss of 9.18%. In March, I added to 2 existing positions, with mixed results so far, highlighting the nuances of different buying approaches. For both, I employed distinctive strategies. I'm currently developing a spreadsheet to enhance my buying decisions by assessing the stock's fundamentals and incorporating a safety margin. This tool calculates a fundamental value and sets a buying threshold, in my case 20% below that value. My first purchase was SPG. Here I strictly adhered to the spreadsheet analysis. It indicated a strong buy and I executed the market order for 1.38 shares at $248. For my second edition, I combined my spreadsheet analysis with a different tactic. I recalled from a financial advisor's YouTube video, placing your market order at an intended stop loss price. It took 2.5 days to execute, but the result was impressive. I acquired 2.69 shares at $242, and within 30 minutes, the shares were in profit. So looking at the performance since these purchases, SPG has seen a decline of 7.15% this month, and DELL has a gain of 0.93% from my buying price, but it is down overall 10.76 this month. I believe this performance in DELL demonstrates the potential benefit timing of that specific entry point. While short-term fluctuations are expected, especially in the current market, I remain confident in the long-term prospects about both SPG and DELL. Now let's take a look at the dividends paid out in March. So we have 6 dividends that paid out in March. Visa 11 cents, Simon Property Group $3.07, IBM 32 cents, Microsoft 18 cents, Pepsi 17 cents, and Amgen 98 cents, giving me a total dividends for this month of $4.83. And as usual, my monthly contribution was €457, and this month it exchanged to 491 The dividends I reinvested was $1.50, and I paid $2 in commissions because I opened 2 new positions. So my total monthly investment was $490. So let's have a look at the market outlook. March definitely felt like it kicked up with volatility compared to February. Looking at my portfolio, the tech and financial sectors took a hit, likely fueled by tariffs concerns, persistent inflation, and weakening customer sentiment. It seems people are tightening their belts. On the brighter side, I've seen a steady growth in healthcare and consumer staples like Colgate and Coca-Cola. In this kind of uncertain environment, making firm predictions is tough. My strategy remains to hold my current positions and keep some cash in hand, as I believe this volatility could create some attractive buying options. Looking ahead, I've come across an interesting article about a potential investment plan from Johnson & Johnson. This could be a fantastic opportunity, so I'm going to be digging deep into the details. If my research uncovers something promising, I'll definitely share my findings with you in a dedicated video, so keep an eye out for that. Beyond that, my strategy remains fairly conservative for now, holding on to my cash and actively watching the market for compelling entry points. Now I'm curious, would you be interested in a detailed deep dive video where I walk you through my entire portfolio, explaining the reasoning behind each holding? If that's something you find valuable, please let me know in the comments. Thanks again for tuning in. I hope you found this portfolio update interesting and helpful for your own financial journey. If you did, please give this video a like and consider subscribing. It truly helps the channel reach more people. My goal with this channel is to show that the average person like me can build a solid financial future for themselves and their family through consistent, dividend-focused investing. Then you absolutely can too. Thanks for being a part of the Dividend Dad community. I'll see you in the next update.